Hello and welcome to another episode of Monday Markets. As always, we are brought to you by Woo. Links available in the description below. With any centralized exchange, do not keep any more funds than you need for trading. The whole point of leverage is to allow you to reduce your counterparty risk and trade your full account size without having your full collateral on the exchange. Thank you for the recent support on Casual Friday and on the channel. We appreciate all the likes, comments, subscriptions, all that stuff, so thank you for hanging around. I will keep this brief to save you some time. Let's go over the timeframes. So on the monthly, 27.2 is monthly resistance. We're there now. If you wanted to be bullish on the monthly, you'd have to either wait for monthly support to be reached, which is 23 to 20, or at the very least in the short term to close above 27.2, and then you can make the argument that we've reclaimed the bottom of the cluster and we're going to trade towards the top of the cluster at 29.2, 29.3. If you wanted to get particularly esoteric with it, you could derive a range from this and the range high to the range low and get a midpoint of the monthly levels at 28.2. But for the time being, without reading into that too much, we are retesting resistance at 27.2. Now, the weekly time frame resulted in a failed breakdown at 26k. I was wrong about that on Monday. My view was that it's more likely to be a real breakdown than not, but the weekly close proved otherwise, and we sort of rallied during the course of this week so far on Monday. Again, the problem with this rally, that makes me sound like a bear tard, but what's difficult in terms of positioning for this move is that, as we just discussed, 27.2, 27.4, all of that is monthly resistance. So unless you were Don style early to the weekly breakdown, it's much more difficult to justify chasing it now as it's reached an area of monthly resistance. Even if we take this pre-breakdown range ETF, pre-ETF range that we've discussed before, and go from range low to range high and sort of have that as our range, we're still trading around the range low, and we've retested the midpoint at 27.4. So if you wanted to make the argument for weekly bullish continuation, I think at the very least, you'd want to close above the range low that we're retesting now at 26.7, 26.8. And then you could make the case that, yeah, look, we wicked a bit, but ultimately we closed above the range low, and that would open up the route for a retest at the midpoint and potentially to the range high. So as we discussed on the monthly, your minimum, we are at resistance. The minimum requirement to be bullish is back above 27.2. On the weekly, we are sort of oscillating around the range low. The minimum candle close requirement to be bullish would be above 26.7, 26.8. And then you would just target the respective midpoint and range high of that same consolidation. And then on the daily time frame, it's also, again, the same area relevant in terms of support resistance, where we have this old daily cluster, which I still think is a good level, especially sort of recently and on this side of the market. Same old levels, 27.3, 27.4 as resistance that we're testing at the moment. So essentially the TLDR is, candidly, unless you were early to the failed breakdown, this is a very tricky part of the move to do business because the easy portion has played out and we've now reached resistance. As far as daily timeframe supports go, I think the best version I can come up with is 26.4. And so you can see it kind of leaves us in a bit of a tricky area. So if we delete the bottom of the cluster and we're left with 27.4, which is, as we know, monthly, weekly, daily resistance, and then daily support at 26.4, we have a $1,000 range here, which isn't that much. And I think trading between these boundaries might be tricky. And if you're looking for somewhat clearer signals, candle closes through those boundaries would be clearer. So for example, if the market were to offer acceptance above 27.4, then you could start making bullish arguments that yes, it is the daily time frame, but then if that follows through, the weekly and daily would fall in, the weekly and the monthly would fall in line, and those would look good. And then you would look to take it from the range high into this swing high and to fill in some of this 30k breakdown. But that argument, so if you're a higher conviction bullish argument is available above 27.4, where we get through that wall of multi-time frame worry. As far as the higher conviction bearish argument, it would be taking the market back below 26.4. So daily close back below 26.4. The argument would look something like, we had a rally, we reached this high time frame confluent resistance area in the 27,000s, and then we lost daily support. And so this price action starts to look more like a high time frame wick before continuation lower. So your high conviction areas are 27.4 and 26.4. Anything in between is just a bit troublesome, given there's a lot of overlapping resistance in that area. Hope that makes sense. As far as ETH goes, I'm not going to spend too much time here because there's not a lot going on. In terms of TA, it continues to be weaker than BTC. So BTC had a failed breakdown around its June low at 1700, 1720, whatever you want to call it, however you want to anchor this level. That's the equivalent failed breakdown in BTC. Whereas, as you can tell on the ETH USD chart, there's no such reclaim, no such failed breakdown at the time of recording. There was a bounce, the whole market's pretty correlated, so everything bounced. But unlike BTC, this underperformed on the rally and hasn't structurally formed any reclaims yet. So that makes it pretty tricky. I think that argument is also compounded by looking at ETH BTC, which has been, it went down in the past week, and in general, it sort of seems to be drooping towards a lot of these lows. Now, if, for example, the market comes in and we have a big sort of failed breakdown through the 06 level that results in a violent reclaim, that would be good and maybe would create a short-term window for ETH outperformance. But beyond technicals, the difficult part with ETH is that it's neither here nor there. And by that, I mean, if you're going to be taking bullish trades, most of the narrative and catalyst stuff is centered around BTC with the Bitcoin spot ETF. So if you're going to be a bull, it makes sense to be a Bitcoin bull. At the same time, if you're going to be a bear, it makes more sense to be an altcoin bear, because if the market's really weak and the whole thing pukes, then those will print more on the short side than BTC or ETH. So essentially your options are, if you want to be bullish the market and you're looking for strength, you look for BTC. If you're looking for weakness, it generally makes more sense to look for alts, and ETH falls neither here nor there between those two. So that's why I haven't been paying a lot of attention to ETH. I did say I'd make this quick, not to waste your time, and that's really all I've got. Altcoins, just follow the rest of the market. BTC and ETH bounce, altcoins bounce, BTC and ETH go down, altcoins go down. Otherwise, as far as centralized exchange trading stuff goes, it's been the same low cap pump and dump on Binance futures, TRB, Hi-Fi, Cyber, all this stuff following the same pattern. I've tweeted about it in the past, what I think is going on, sort of mechanistically, how those max negative funding trades are working. But really, in terms of your standard technical trades, there really hasn't been a lot going on the altcoin front. And I think it's more important to focus not even on ETH and BTC and ETH, but more on BTC itself, which is why I spent most of the video there, tried to keep it brief, and hopefully that was helpful. As always, feel free to leave any comments, feedback, questions, concerns, criticisms, all that type of stuff. I appreciate you watching. Leave a like, subscribe to the video if that's your thing. The show is brought to you by Woo. It's cool that they support us even when times are tough for centralized exchanges. Nonetheless, do not take that as evidence in itself. Do your own research and only keep funds that you absolutely need for trading with any single centralized exchange, and do not keep all your funds on one centralized exchange either. That's all from me, a bit of a short one. If you want some additional other content, please let me know. And otherwise, I will see you for the newsletter tomorrow at trletter.com and for the usual content for the rest of the week. Thank you. Goodbye.